Good morning, everyone. You are watching the Windsor Brokers live daily market outlook for Friday, 22nd of March 2013. We are at the end of quite a turbulent week where Cyprus was and it still is the main focus of the world. The news that came late, the latest news that came out are not that optimistic, as Cypriot Finance Minister Saris is coming back from Moscow with empty hands. 3 days talks in Moscow for a possible funding lifeline from Russia to Cyprus ended without results. Further cutting the East Islands options for raising billions of euros needed to find by Monday and to avert a financial meltdown as the time is counting and deadline set by European Union is approaching. Not quite a bright situation seen here in Cyprus. The comments from both parts of the conversation show that there was nothing. Russian Finance Minister Anton Siluanov said that 2 days of talks had produced nothing new, and he added that Russian investors were not interested in the Cyprus offshore gas reserves or its financial sector. That were the two top offers on the table during the negotiations. The conversation between the two sides ended up during the night and without any agreement even of extending. That was not even on the table. They're extending the Cyprus existing 2.5 billion loan from Russia that is maturing in 2016. The Cypriot side reminder they were asking for extension for another 5 years, and the drop of the interest set at 4.5% to down to 2.5 or 3%. The Russian minister said that the structure proposed by Cypriot side was to create a state company and transfer energy assets to it, and the entity would issue bonds to Russian investors who would have an opportunity later to gain an equity interest. But he said that the investors reviewed the question and did not show any interest. That resulted, of course, in the ending the conversation without any result and any agreement. Meantime, the government in Nicosia is preparing new measurements that involves especially the Cyprus Popular Bank that was on the top headlines in past 2 days. There were a lot of rumors of being sold, then denied by the government, closing down, and then again denied by the other officials. Final story goes that there will be the bank will be split into two parts, good and bad one. The measurements that are about to be announced today will show what was the final decision of the Cypriot government. However, there will be some restrictions in the access to the assets of the investors, at least in the Cyprus Popular Bank. More news we will have later today as deadline comes on Monday. Some comments saying that the problem will be solved by Monday. So we are watching closely to see what is going to happen. Everyone wants some good and workable solution, as the current situation doesn't suit any side. The market showed limited reaction during the yesterday's session, with euro still being within the range, even narrowing it, showing no direction at this point, mostly due to the Cypriot problem that there is still any solution, and the investors are awaiting. Among those that benefited was sterling dollar and the Aussie dollar, US dollar, that ticked higher and broke above their near-term ranges and tested some important levels. Conversely, on losing side was the dollar yen that failed to capitalize its rally to 96 barrier and the rejection there and subsequent pullback. Now it's again putting more pressure. Commodities are also pressured, and especially this is seen at the beginning of the European session as gold and silver as well as crude oil are ticking lower. Gold is still in the positive territory above 1600 support, and while holding above there, it keeps the upside focused, with the crude oil currently holding at May contract at 92.40, aligned towards the downside, following upside rejection at 94.45 3 days ago, and the dip as low as 91.82 as 92 support, and the base has been cracked. Now this is giving, from technical point, more potential towards the downside. Total absence of news economic indicators today, except the German IFO data that are due at 9 o'clock, and the positive forecast at 107.8 compared to 107.4 of the previous release is seen, showing that the German economy will likely gain traction later in 2013, despite a subdued start of year, which has included data showing the industrial sector performing poorly. The Europe's largest economy shrank by 0.6% in the fourth quarter of 2012, and while recent forward-looking sentiment indicators point to a slight upturn in the economy in the first quarter, there is a little hard data to back this up. The latest data showed industrial output stalling in January and orders sliding, which bodes ill for the coming months. Other data has, however, been more positive, with the retail sales rising sharply, unemployment falling, and exports increasing. Most economists expect Germany to grow moderately in the first 3 months of 2013, and thereby avoid the second quarter of contraction that would put it in a technical recession. The German government expects economic growth of 0.4% this year, after 0.7% growth seen in 2012, and this is all regarding news and fundamentals for today. We're going to take a look at the technicals. Again, I have to stress that no significant action seen so far of a number of instruments, but it's worth to take a look and see, most likely due to the likely release of Cypriot solution of the Cypriot problem, that the government will likely come out today with some new proposals and decisions. We might expect some more action in the market. As said, the euro remains stuck within its recently established range from Monday. Actually, the whole week the pair spent between 128.40 and 128.29.75. Holding short below important and pivotal 130 point. That is approximately a 61.8% retracement of the fall from last Friday's peak to the weekly low. That is seen as a trigger required to ease the immediate bear pressure and allow for some stronger recovery, as shown on the hourly chart, where the indicators are still showing quite a negative tone, and the price during the Asian session and late afternoon late afternoon hours of American session yesterday held around in the tight range around the 129 level. On the downside, the low firm break below 129 will keep the bullish structure intact, and will open immediate target at 128.42. This is the low of 19th of March. That may risk again extension of the larger downtrend established from 137.10 annual high posted on 2nd of January 2013, and this will be a signal for further resumption lower, as the pair so far retraced slightly over 50% of the larger 120.42 137.10 ascent, with the downside so far being contained by 200 days moving average that is currently at 128.72. We need to see the break below this level and 128.42 in order to confirm the bearish tone that was established on Monday's gap lower opening. As we can see on the daily chart, there is a triangular consolidation during the past week, and the break of this shape will give us fresh direction. According to the larger picture studies that are still negative, we can see the dailies are firmly in the negative territory. A more likely scenario will be seen on a break lower according to the technicals. However, break above 130.00 is seen as initial trigger for some more significant corrective action that requires a regain of 131.06, 131.33 previous peaks in order to confirm bottom at 128.42 and allow for some stronger recovery that will prevent pair from further slide. On the downside, a set break below 128.42 is set to open 128.00. The British pound dollar cable is one of the instruments that benefited yesterday as final break above the recent range between 151.75 and 150.70 if we include this noise seen last Thursday, resulted in a brief test of the lower part of the strong resistance at 152.20 zone, which is also seen as a pivotal for the pair. 152.08 seen so far, followed by a quick dip lower down to 151.24, but the pair quickly regained the strength and they opened and pushed price higher. That is currently hovering just under 152.00. As we can see, hourly IDX are still positive and still holding a bullish tone. On the hourly chart, the indicators are still lacking momentum for some more significant move higher, despite holding in the positive territory. As we can see, the 20-day momentum is still quite low and is threatening a break below its midline. 4-hour structure, however, gives some more positive tone as all indicators are pointing higher, and the price is well supported by ascending 20 days exponential moving average, including also the bullish break of 20 over 55 days moving averages that underpins current action. As said, break above 152.20 is required to confirm the bottom at 148.30 and allow for some stronger corrective action that will open levels at 152 as the first seen on the upside, and then we have 152.33 30 zone, which is the previous strong multi-year range bottom. Basically, this is seen as a main break point, and the break above this and the weekly close above this will be quite supportive for the near-term price action of the sterling. Of course, any action towards the downside is seen so far supported by previous tops at approximately 150.70, while loss of the range floor at 150.70 will be bearish. From the other side, the dollar yen lost its traction after an unsuccessful attempt at at 96.00. Reversal rejection there, and the quick reversal that lost its initial support and the higher low at 94.71, now threatening a full retracement. We're quite close to the weekly low at 94.30, with the losses reaching 94.38 so far. So moving lower, most likely scenario is seen on a full retracement completion of the near-term recovery action from 94.30 and the fresh extension lower that is looking for further retracement of the pullback of the rally from 9085 to 96.70. That so far retraced slightly below 38.2%. More bearish tone now seen on the yesterday's pullback and the fresh extension lower. Break below 94.30 will look for a test, as we also cracked the previous tops and the consolidation range highs at 94.50, and now the extension lower will be looking for immediate targets at 94.00 as a near round figure support, as well as 93.80, which is 50% retracement of the entire 90.85, 96.70 rally. That will trigger further bearish action and look for the further extension of 96 of the pullback from 96.70. Break below 94.30 is to confirm also the lower top at 96.12, and the more bearish tone I can say is expected during today's trading, as quite negative tone seen on the lower time frames favors the downside at this point. Daily bulls are now under threat as indicators are again starting to point lower, and this is favoring a further retracement of the larger so far unobstructed uptrend with the key supports seen at 92 and 90.85 below which we might be facing some more significant reversal. Among the other instruments that benefited yesterday is the Aussie dollar as it broke above recent congestion limited at 104 zone. 104.12 was the highest seen, and then the pair remained congested within this range for past few sessions. Yesterday's fresh break higher so far tested our initial resistance at 104.55 ahead of 104.75 and 105.00 with brief corrective pullback down to 104.20 being contained by above the previous highs, and as well as being contained by 20 days exponential moving average that keeps the bullish structure, immediate bullish structure in play for a fresh attack higher that is currently underway, and we might be looking for a retest of 104.57 yesterday's high, and then extension up towards 104.75 and 105.00. Conversely, any break below 104, 104.12, 104.00 would delay. However, any retracement lower should be in any case contained at or above 103.42. Its recent range floor in order. This is also reinforced by ascending 55 days exponential moving average in order to keep the immediate bullish structure intact and unharmed for a possible fresh extension higher. Again, 4-hour indicators are well positioned and in the positive territory and supportive for a possible test of our previously mentioned targets, as well as daily structure firmly bullish tone with the downside being underpinned and the dips contained broadly by 200 days moving average. Break above 55 and 90 days moving averages is now looking for a further extension higher as the price may extend up towards 104.75 we said, and then we have 104.83, 76.4% retracement, and finally psychological 105.00 resistance. From commodities, as we said, they remain under pressure with the crude oil sliding at the beginning of European session. After briefly breaking yesterday below the 92.00 base, 91.82 seen so far, cracking the important support at 92.00. It's better shown on the 4-hour chart where we have quite strong. This is basically the base of the congestion recently established after several attempts higher failed to break higher. We had a spike at 94.45, but the gains were mainly capped at 94 zone, and now a more negative tone is developing on the lower time frames, as we can see on the 4-hour chart that 20 days moving average is attempting to cross below the 55 days one, with indicators now breaking into the negative territory that overall keeps more pressure towards the downside, and the break below 91.90 that is close to the yesterday's low, as well as 50% retracement of 89.35 to 94.45 recovery rally would threaten more reversal and stronger reversal, and on the larger picture this will also risk confirmation of a lower top at 94.45 for a possible fresh extension lower, where we will be looking for test of approximately 91 zone, where is 200 days moving average currently standing. Overall negative tone in the near term is still dominating on the crude oil's price action, and as long as we are standing below 94.45, more risk will be seen towards the downside, despite the current rally from 89.35 lows that left the double bottom at these points being running out of steam just above 50% retracement and being capped by daily 55 days exponential moving average. And finally, the yellow metal, as we said, it's sliding this morning, but still holds a positive tone after hitting fresh high at 16 yesterday. Focus still remains at the upper target and the important pivotal point at 1620, where we have the previous high of 26th of February, as well as 50% Fibonacci retracement of the down leg from 1684 to 1554. Our indicators are again well positioned and still showing positive tone, despite slightly being skewed towards the downside. As long as we hold above 1600 support, this is psychological support, more focus will be still seen towards the upside, while the break below 1600 would delay immediate bulls and look for a further extension lower. While on the upside, the clearance of 1620 is expected to pick up recovery, to extend the recovery phase of 1554 low of 21st of February. That was initially limited at 1620, and the further extension higher will be looking for a test of the next level, which is 1634, the Fibonacci 61.8% retracement, and then 1650 previous lows and 76.4% Fibonacci retracement. As said, upside remains in near-term focus, while the break below 1600 would risk further bearish action. That's all from me for today. I think we covered the most interesting things. If there is any question or comment, please send it now. Okay, no questions. In that case, we will end today's session. Thanks for being with us, and we expect to see you on Monday, where I believe we'll have quite a lot of news, as Cypriot deadline is coming on Monday. In the meantime, today some announcements are expected to be released from the Cypriot government. Stay tuned and keep an eye on the markets. We'll keep you informed through the trading platform. You will get all the relevant and important news, and we're back next Monday at our regular time at 8 o'clock GMT, 10 o'clock local Cyprus time, until the time changes 30th of March, and we move to the summertime. Wish you a nice Friday and a nice and relaxing weekend, and expect to see you again next Monday. Good luck.